Hello guys, how is everybody doing today? Today is now November 8th on a Wednesday, and we're going to take a look at IOTA. We're actually going to take a look at a lot of altcoins because lots happening right now, guys. So you guys ready to take a look at IOTA right before it drops? So just guys, sit back, relax, grab popcorn, watch the awesome P to the Orn. Hammer's gonna drop like Jason Bourne. Short's gonna fly, go airborne. Correction, then it gets reborn, then fly high to the skies like a uniform. Drop the mic. I kept this one really short for you guys. Okay, wow, it is really going down already. It finally broke out of here. Okay, so I've been suggesting for a really long time that you guys take this trade if you couldn't tell, right? Because there was really low risk. So the first trade setup that I suggested was during this specific formation right here. I hope that some of you guys took it and made some money because it was quite an awesome setup, right? Remember how I was talking about how this made this type of correction here? It made an A, B, C, D, and then E. And then once this happens, right? We basically go into a long position because, well, it's a continuation pattern that's gonna happen, right? This is the consolidation pattern, and then once we consolidate, we break out of it usually, and then you set your stop loss slightly below it. You take your base range. I'm just gonna move this over to get the base range over here. So what we do is, for the new viewers, for a pattern like this, if you are a, for example, swing trader, or if you are an investor, or investor in terms of holding a position for a much longer time than a day, or a swing trader where you're only holding it for a week, you take this base range right here of the wedge, okay? So you take the base range of the wedge, and then you just target here basically, right? And then you use it as the same target. And then what you would do is you would set your stop loss slightly below it, right? And then slightly below it, and then you would just aim for this target right here, which is very reasonable in my opinion, right? And a normal target would most likely be something like this, where you take, for example, the lowest point right there. This is your Fibonacci extension tool that I'm using. If you guys don't know where it is, it's over here, then trend-based Fib extension. Choose your lowest point, choose your highest point right there, and then choose the next lowest point, which is about right there. Just make sure you're on the same line. It doesn't have to be the exact spot. So a realistic target would probably be about 1-to-1, because we would assume that the next wave is much stronger. But in this particular case, it was about a 6-1-8 ratio there for the same size as the base wedge. Just let me confirm it. Yeah, about the same there. So this is a trade that you could have entered, right? And because it never hit your stop loss yet, you could have just basically rode the wave, right? And just try to target over here. I mean, right now, we are so close to that daily moving average. The moving average 55 is closing in about 3 hours. And once it closes over, so I follow a few rules. And one of the rules I follow is the body can close in between the 55 moving average, right? And then let's just draw this line over right here. Let's just pretend that it's extending, okay? It's extending like that. So the next candle that we would like to have is basically a candle like this one. And these are my favorite confirmations. So we get a nice green candle like that. Maybe not that big, you know, it can be small, but one thing we definitely want is a rejection, okay? This rejection is really important. So what we can expect is when this closes above it, people will take profit, right? People will take profit almost with, I'm expecting them to take profit in 2 to 3 hours. That's my expectation, because they will have successfully closed above here. So what will happen in the next candle is there's going to be possibly a long wick, I'm guessing to about 43. We'll analyze this in great detail soon. It'll probably fall to 43, and then the same day, right? And the same day, it'll go down to here about, for example, maybe not as much, right? But then by the end of the day, they'll push it back up and we'll get a small rejection like that. So what this implies is people took profit and then they pushed it all the way down, right? They pushed it all the way down, and then the bulls regained control and actually pushed it back up. So that's going to be ideal. So today, I don't see it going much lower in the next 3 hours than say here, but the next day within 3 hours, not November 9th, but as in 3 hours, that's when the day closes for me. And I expect this long wick to come down here to 43 within, 27 hours. and then it'll be rejected by the bulls and pushed all the way back up. So that was a great setup for people to have taken, because the pattern that we're in, right, is basically a falling wedge. And I'm just going to explain to the new people that don't know what a falling wedge is, because my YouTube, you know what, guys? My YouTube channel is very, very different, okay? It's not just to give technical analysis. It's to also explain things in high detail. So I apologize for the viewers that are probably way more experienced and technical than I am. This YouTube channel is basically to help out the community, because I think there's a lack of help like this in the community. So what we want to do is improve the community by showing people what we know. Now, I don't think I know everything, far from it, right? But what I do have the mindset of is always continuously learning, because like anything in life, we want to make sure that we continuously improve ourselves and our skills as well, right? Whether it's, you know, you're a big car lover, what I do on the side, or used to do often until my addiction of trading like really took over. Like I kid you not, guys, I might be, if trading doesn't work out for me, I'm gonna open like basically a trading anonymous kind of you know, rehab center, because I'm starting to find it really overwhelming. Like I just can't stop myself from trading, guys. Like I'm so addicted to trading, you know. I wake up odd hours of the night. I'm constantly dreaming about it. My subconscious is always dreaming about the weirdest stuff. Like one time I had Neo, it reached a really high point, right? So what I was doing in my dream was I was looking for my USB cold storage wallet, right? And then I apparently buried it somewhere in someone's backyard. And in my whole dream, I was looking for this USB cold storage, trying to transfer it to Bitfinex so I could actually sell it. And I was so stressed out in the dream, you guys had no idea. And then I woke up and then I realized, hey, it was just a dream. All my Neo's perfectly safe. So that's the kind of struggles that I have, guys. And these, I know that you guys are probably laughing at me right now, okay? It's not a funny thing to be laughing at, I'm telling you. This is a really serious thing that I go through every single day, okay? So anyways, if trading doesn't work out, that is what I'm gonna do, okay? So what we want to always do is try to improve the community, right? And if I'm wrong, so what? I'm wrong, guys. It happens. People are right, people are wrong. But the point is, I want to explain in very high detail what goes through my mind, and you know, whether I'm a successful trader to myself or not. What I do know is that I do this full time, right, guys? I do this full time, and I make my living off of it. My bills are paid. My little girl, Luna, my dog, she's taken care of. You know, I've got enough of a means to sustain myself and be able to sit in my underwear all day at home. Usually there's not even underwear. Usually it's just commando. Who am I kidding, right? Remember, guys, like I said, everybody get up and do the fandango. Just make sure you're up there commando. So yeah. So yeah, and if you guys have a difference of opinion, you know, like absolutely vocalize it as well, right? But we try to be polite about our opinions, and I will absolutely take constructive criticism. I don't think I know everything, but I do want to show you guys what I do know, and I wanna pass on basically what I do know. And what I do know is that this is a falling wedge, okay? This is a falling wedge, and we're just gonna use 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, and you know, usually when it gets somewhere, maybe it might be a different magnitude, right? It might be something like that. Just as an example, okay? It's usually very symmetric. If you guys notice the symmetry of this line, right? Look at it. Look how beautiful the angles are. Look how beautiful everything is, right? I mean, if I drew a line from here to here, and I just brought it over to here, wow, it's kind of identical, guys, in terms of angle. Here, ooh, it's kind of identical as well. And if I did the exact same thing to here, right? Ooh, that's kind of going to be identical to this one almost. Yeah, pretty much. So that's how you know how identical they can be. Now, let's see if this symmetry also matches, say, for this one right here. Nope, not pretty, actually quite. From right here to right here, you can use it kind of as a gauge, right, to how it can go. And if I drew one from here to here, right, just as an example, I dragged it over. It's not exactly close, but it gives you a very, I know it could be like this, I know it could be like that, whatever, but usually charts tend to follow a very similar pattern structure. And I just want to say for the record that I've shorted right here from 48 cents, and I'm already 1 cent up. Now, put that into perspective, guys, 1 cent up, okay? So my average sizes are anywhere from 3 to 5K, as you guys have seen, sometimes 10K and up. This one was 5, okay? So 5,000 times 1 penny. I'm up at least $50 already. I know that's not that much. Oh, actually, it's more than that. Jesus, 5 grand divided by 0.472, right? I've got 10,000 coins there times 0.1. So I'm up like $110 in that coin. Pretty good. And so this one broke out of there, right? So we take our risk to reward ratio right here. We could take a long position of right here, right? So right on the breakout, you could have entered a long position, even if it was a short term. You could have tried to target the 55 EMA right there, and your risk to reward ratio would have been 3.1. You had a chance to gain 32%. You had a chance to lose 10%. Now, for those that don't know what a stop loss is, let me explain it really quickly, okay? A stop loss is basically the point where you decide to cut your losses because it's going against you. And it's really important as a trader to have a stop loss, okay? You know, we might lose 5% here, 5% there, 5% there, but on the next trade, when we win that 20% trade, it kind of makes up for it. So we always try to factor things in from a risk to reward ratio, right? And I know that within a few years from now, or a few months from now, or even a few weeks from now, you guys are gonna know what risk to reward is very well because I talk about it a lot, okay? So this one here, you could have set a stop loss slightly below the most current low, which is this right here, okay? This candle right there, basically, slightly below it, and you still could have taken a stop loss of around, say, 31 cents there in case it broke down, right? So for the day traders, they could have, or even for the swing traders, right? On November here, I think that's when I made, or like early November, that's when I made my first trade, my first video in IOTA. You could have taken a trade, wrote it up there, tried to target the 55 EMA. It clearly didn't break it, right? Usually what I do is I set a stop loss, or sorry, not a stop loss, a limit order right below it slightly, just so I can take profit and minimize my risk. And then if it does break it and it bounces off of it, I'll actually re-enter it right there. So this one here, if you set a stop loss slightly lower than here, and if you're, for example, a swing trader or you even hold longer, you wouldn't have even hit your stop loss yet, and it actually went even higher. So that's really good. So this has got a really good risk to reward ratio. Now, a few days ago, actually it might have been yesterday, right? I mentioned that we broke out of this particular area, right? And we entered this zone here instead now that formed 3 points still, right? We entered this zone right here, right? So we broke out of that area right there, and then we actually have a few more points that form right here. So because this formed now, we can just count A, B, C, D, E again. That one doesn't really count. It barely touched it, so I would rather count this one there. Here it poked through, so I will count that. Here it didn't break through, so I will count that. And then this will be the fifth wave right there. And if we look at it close, do you guys notice the symmetry as well in the angles, right? It's super, super similar in how it travels. So here, because we got to this position, it would have been a phenomenal trade to take again, right? Upon the breakout, you could have targeted a wedge distance of, say, right here first. So for the longer term holders of IOTA, you would have targeted using this base range here, right, to hold really long and just go with it and just wait. Basically, it's eventually going to hit it, in my opinion. So what I really want to tell you guys is that late 2018, right, all the way from August, a lot of people probably lost a lot of money because playing against, it was a short-term bearish market, but the bearish market was actually just for consolidation. Okay, you know what? Before we get into this, I'm going to show you guys something right after here. So here we take this base range and we could have targeted right here, right? I have no doubt that after this correction, it's going to make a few more waves. Take a look at this similarity, okay, guys? When trading, there's an index called a similarity index, okay? And we use that as a gauge for other coins, right? Just to see if we find similar patterns in other coins. If you guys noticed about that I've been drawing in every single chart from about August, it absolutely makes some sort of wedge or triangle pattern, right? Now let's take a look at OmiziGO again. What do you guys notice about OmiziGO? It's actually doing the exact same thing and it finally broke out today. What do you guys notice about ETP? ETP, yeah, it's such a good coin. Love it. Does the exact same thing, right? There's definitely like a wedge kind of pattern that's forming, or a channel. What do you guys notice about it? Let's make this a little bit, say in here, it's actually, this is the right pattern here, and it broke out, right? Notice it broke out today. And then we're gonna look at OMIZIG, sorry, not OMIZIGO. We looked at that on, say, Ripple. Let's look at Ripple on Bitfinex, right? Just look at it on the daily. There's not that much data because it was just recently added only in June. But here we basically see a huge pattern like that, right? Do you guys see it as well? This one's a little bit different. It was bull broken a few times, but we see a very similar type of consolidation pattern. If I actually look at it on Poloniex, it will show much better, right? It shows a lot better in Poloniex because it was added well before. This one's been consolidating since about June. What do you guys think is going to happen at the end of 2012? Or 2017, right? Let's look at Litecoin. Let's go Litecoin on Bitfinex here. What do you guys notice about that? Finally broke out of it, right? What I'm getting to, guys, is that 2017, from about August, if you guys notice, right, the uptrend, and then right in September, Bitcoin corrected, so every coin corrected with it. We have a very, very high, guys, similarity index, okay? We look at EOS right now, it's doing the same thing, but on a small time frame because it's a fairly new coin, right? Super similar. And what do you guys notice on every coin when it gets to the end? It breaks out in a very, very major fashion. And what I'm getting to is, guys, 2017, it really, really was the year of correction. And 2018, guys, is going to be such a bullish year. And I'll explain why. It's because Bitcoin is getting lots of publicity right now in mainstream media. You know, it finally got the attentions of investment bankers, or sorry, investment banks. You know, Goldman Sachs, JP Morgan, you guys name it, okay? So many companies are hopping on it. It's, you know, as soon as it reached $6,000-7,000, these investors are saying, hey guys, maybe this is something we can invest in as a rare commodity like gold or silver, right? And now we're finally getting that mainstream adoption that's slowly starting to factor, it's slowly starting to show as well, right? The fundamental news that's driving the market, that's being plastered in the media everywhere, on, you know, CoinDesk, in the Wall Street Journal as well. So many articles. Huffington Post is even posting about it. I'm hearing it in my local news as well, guys. And with all of this mainstream attention that it's getting, it's absolutely causing a breakout, right? And now that we're seeing so much volume that's just being spiked in the past day, last time we saw this much volume, guys, was like, you know, October 25th, 4th, okay? October 24th, right here. And what I wanted to cover specifically is that people were hoarding. The reason why our corrections were getting extended is because people were really, really hoarding Bitcoin, right? They wanted a lot of it. It was driving up the market because of the SegWit 2x split. But today is the day, if you guys are not caught up yet, that SegWit 2x, it was canceled, guys. It was canceled because the miners couldn't reach a consensus. So what happened to Bitcoin, for those people that don't know? It's important to get caught up in these things because let's just go to Litecoin, for example. Actually, no, not there. I'll go to my exchange because I trade on there. Let's go to Bitfinex, okay? What do you guys notice about Bitcoin? Let's go into a better time frame. What you guys notice about Bitcoin is it dropped from $7,900 all the way down to under $7,000 today in less than 1-2 hours, guys. In 2 hours, Bitcoin dropped $923, guys, in 2 hours today, okay? Because people, you know, they don't care about holding Bitcoin because there's no split anymore. So everybody, or there's no fork anymore. So people were just dumping into the mass market, guys. And do you guys know what happens when a massive amount of money is removed from the market cap of Bitcoin? You guys know, I don't need to answer it, but for the people that don't know, it gets allocated right? The market cap stays relatively the same amount, but what ends up happening is a lot of the money is now pumped into altcoins because they believe that altcoins are already at a very low price, right? Do you guys see the correlation here? The correlation with Bitcoin and all altcoins is pretty much negative, right? It's got like a slightly negative correlation. So if we look at this right here, this correction, and then if we look at a coin like here, we see kind of the opposite, right? We see like a massive, whatever, we can call it like that. I'll just draw like a wedge or something like that. It's not exactly like that, but you guys know what I mean, where this one is kind of a negative correlation, right? This one is going up like that. This one's definitely going up like that in like a kind of a channel, right? It actually broke out of this channel here, and it actually skyrocketed out of it, which is really rare to happen, guys, but it can happen, right? So while Bitcoin is going up immensely, we take a look at every other coin, and they're actually going down. So which means that the money is being put into the Bitcoin market right now, but as soon as money is removed from there, right, we see massive pumps into the altcoins because altcoins are ready to break out anyways. So what ends up happening is, guys, they say, hey, let's sell our Bitcoin right now. Yeah, so they say, let's sell our Bitcoin right now and let's put into other markets. I just wanted to make a quick note here for you guys that I want to thank all of you guys. Lest we forget, thank you everyone for 911 followers. I don't know if that's an appropriate joke or not to make, but I just thought it was a funny coincidence, right? Like when I had 420 followers, I said happy 420, thank you very much for the follows. So yeah, so I thought it was kind of funny, but it's never joke about that, of course, but it's just a funny reference, right? So you guys know my sense of humor by now for all the people that are watching. So yeah, so this was a really good trade setup to take, and like I mentioned, money is absolutely being put into other markets right now. We're slowly seeing a downtick actually. I'm super happy that I'm already like a penny up. A penny doesn't seem like much, but it sure adds up. So yeah, so if you guys didn't take that trade setup, right? I mean, we're looking at I'm just trapping my triangle box here. So we noticed that like there's some good buy zones, like right here is a good buy zone, right? In general, just from the past. Actually not there, my bad, like right here. So when we weigh in the actual probability of it dropping down to this zone, you guys might be asking, why is this a buy zone? Because we consider it a buy zone because before the breakout, right? You can think of this like a launch pad. People were accumulating here, and it acts as a really strong support to go down less. Then it just used like a launch pad to go up. So we think to ourselves, was it even possible for it to get to this particular area? And it could have been, right? So because it was possible to get there, but not likely because it was so close to there already, it almost would have been silly to not take this trade. So if you guys have been following my IOTA predictions, let me know. I want to know if you guys actually made some money doing this, okay? Because that's really important for me to know as someone who's doing a technical analysis, how well I'm doing as well. Can you guys imagine the kind of pressure though, like for people who are doing technical analysis online? There's not a lot of people who do this online because quite frankly, they're scared of being wrong, right? They're really scared of being wrong, and the amount of financial responsibility that someone can have while doing this, it's actually immense. So when I do it, I do get stressed out as well. Actually, the stress is, I don't really get stressed out a lot at all, but doing this, it stresses me out because I worry about the people that are actually listening to me, right? I don't want to be wrong. So this is just not me trying to pep myself up in the video. It's actually trying to give sound advice, and that's why I always talk about stop losses. It's important for me to talk about stop loss because we all need to know when we can enter, when we might need to exit, and what's even more important than that is knowing every single possible scenario, right? So when I talk about things like this green box right here as well, right, you can think of that like as a buy zone or a stop loss area, but because it was getting so close to it already, I didn't think it was going to get there. So this trade would have been silly to not take, right? I mean, today if you guys took it, you would have been up 28% already, and it was just coincidence, guys. it was just pure coincidence that it was close, very nearing the end of the breakout already. Okay, guys. I mean, if the SegWit thing didn't happen, we probably just would have extended it for a few more days, right? But the SegWit 2x fork was actually just around the corner anyways, and it has according to Goldbug1 on TradingView, he's a really good Bitcoin analyst, one of my favorites, combined with Sean Vengen. Vengen. I'm gonna write their names out in case you guys would like to know. So one guy on TradingView is Goldbug1. It might be spelled like that, Goldbug1, but I think it's spelled like that. And the other guy is Sean Vengen. So check them out on TradingView. They don't pay me to say anything like this. Okay, I use TradingView all the time, and I'm sure that we all do as well, right? They're very good analysts. His Goldbug, he's got a reputation. People call him Bear Bug. They call him Bear Bug because he's quite bearish, right, from all of his views. Sean Vengen, he is a really good analyst. He likes to cover all possible scenarios like Goldbug, but that's what I like about them a lot. So let's take a look at this in closer detail to see what's going on. I'm already up. Whew, am I ever up? I'll be right back. So what I wanted to take a look at now, I'm sorry, I had to go check my price because it's gone down since we made this video. You know, I was explaining to people why I thought it was going to drop now. So we're going to take a look at it first of all on the 4-hour chart. Okay, guys, the 4-hour chart is extremely high right now, right? Extremely high right now, and it's actually making an inverted hammer already where it's starting to correct. The 5 waves have already formed there. The 3-hour is extremely too high right now. The 2-hour is extremely too high as well right now. 1 hour is too high right now as well. The 4-hour or the 45 minutes starting to diverge bearishly. This is a sign. You know what I've noticed, guys? I want to tell you guys something, that I'm actually more bearish biased. I realized today for the first time that I'm incredibly bearish compared to bullish, right? And it just goes to show how I trade based on Elliot wave principles. So what I do is I count 1, 2, 3, 4, 5 waves, right? Like you guys always see in my videos. And as soon as I count those 5 waves on an impulse, if I see the RSI too high on a massive uptrend, I will short it. If I miss, like today, guys, I missed this entire uptrend on every coin except for OmiseGO, where I caught, I think, like 30 cents going up. It was not bad, but I made all my money today on shorting. I shorted OmiseGO 3 or 4 times. This is my 3rd short on IOTA as well, and I've also shorted ETP, right? I think I'm a shorting specialist actually compared to going long, because you know I get a lot of good signals, but I think over time, if you guys watch my videos, what I want to tell you is that I short way more than I go long, if you've noticed, okay? And I'm going to show you guys where we are currently at, and this is really important right now to give you guys a gauge. Okay, first of all, I want to drop my Fibonacci level to let you guys know where I think if you did go long here, congratulations. If you guys took my advice over the past few days, congratulations, and you've been watching my videos, okay? Just make sure you guys tip me. My minimum tip is about 500 million Bitcoins, okay guys? That's the minimum tip. So if you ain't got 500 million Bitcoins, and we're not talking dollars, okay? Just to be clear, we're talking Bitcoins, 500 million Bitcoins, whatever that works out to. Just don't even bother tipping me, okay guys? Because I got standards, okay? I don't want your 2,000 or 3,000 Bitcoins. I want your 500 million. Anyways, all jokes aside, the correction will be to around here, 43 cents first of all. Okay, but we're gonna zoom in really close and we're gonna count the waves, okay? First of all, we're gonna see where the first wave is. We're gonna delete all this now that we're done it. We don't need that anymore for now. Hooray! Okay, we're gonna count this one right here as 1. Is that the first highest point? Would you guys agree with me? Yeah, you would. Okay, here's 2. We're gonna count. All right. 3, 4, and 5. It is so hard to disagree with that count, right guys? It's so hard to disagree with that count. We take the first highest peak, then the second one down here, 3rd one, 4th one, 5th one. Okay, and this one we can even count the subwaves, small first wave, bigger 3rd wave, and a very extended 5th wave, right? This one here we can also count it, small first wave, bigger 3rd wave, almost equal actually, and a very extended fifth wave, right? Let's go in even closer. Yeah, it looks pretty good to me, I'd say. I'm cool with this. Okay, and then here we have 1, 2, and 3, 4, and actually 5 right there. This is an extended fifth wave, I'd call it. Let's get into a 5-minute time frame. Okay, I remember what I did now. Let me show you guys. This is the really important count. This is the count that lets you know where the top is. Okay, so follow very closely and watch this a few times. And this is how I determined it was the top and to start shorting it. Okay, this is my profit line, if you guys can see it right here. Actually, is that one it right there? No, that's weird. What is this line here then? Okay, I deleted it. My profit line is right here actually. 47.29, around there. That's where my base, my average is out to 47.29. Okay, so how did I know that was the top? Well, I counted 1 wave, okay, 2 wave, 3 wave, 4 waves, and 5 waves, okay? And I thought it was going to go down way more, and I just held strong. I could have closed my short here and taken a profit, but I didn't because I was managing just a lot of other coins as well. So when it went up here, I added more. When it went here, I added up more, and here it added up more. So now I'm profiting already, and I'm waiting for it to go down. Now, a lot of people would have shorted from there, right? But we got to wonder, hey, why did it go here, and why did it go there right after? So the way we look at this is we call it an ending fifth wave, okay? This is called an ending fifth wave. And the ending fifth wave goes like this. Basically, it makes a diagonal pattern like this. Now, I want you guys to know that Elliot wave is just one of the indicators that I use to trade to count waves, okay? It doesn't mean that I rely on it entirely. It helps me get a good indication of what impulse wave we're on and whether we're in a correction count. And I won't disagree with anyone who says it's a really good tool for in hindsight, right? But in terms of gauging, for example, engaging, hey, is there going to be a breakout? We don't use Elliott wave to gauge breakouts, right? We use it mainly for targets, for example, right? And when we combine it with other things like candlestick formation, RSI, etc., it can become a really powerful tool to give us a gauge of where targets can be and where we are in the correction process. So make sure we don't just rely on it entirely. Make sure that we're using other indicators such as, RSI is my favorite tool in the world other than Elliott wave, or sorry, favorite indicator. And I live and I eat and I swear by it. And I also use the MACD a lot. But specifically, I use the histogram a lot as well, okay? The histogram, it gives us a really accurate idea of when it's starting to downtick and when it's starting to uptick and when it's starting to flatten out, right? So right here, obviously it was flattening out, could have entered a short position on the next tick down, right? Rode it all the way to down over there, for example. All right, so yeah, we use it with even volume as well, right? We use it with moving averages, we use it with candlestick formation, we combine it with patterns as well that we see. Candlesticks are also really important, okay? So this right here is called an ending fifth wave, okay? Ending diagonal fifth wave. And we see these patterns all the time that emerged. And you guys might have seen me talk about it immensely before in Omiza Go. Just to give you an example where we can see these kind of patterns, right? Let me go to Omiza Go and see if you guys can see it. Sorry, I'm just trying to look for it. My apologies for keeping you guys waiting. Where the heck is Bitfinex? There we go. So I remember it very clearly in an uptrend before somewhere. For example, right here, right? It was making a zigzag ending fifth wave there. I remember seeing it a few days ago here as well. Right here especially, okay? This is a big one. It's an ending fifth wave, right? Where it goes up and it forms a diagonal. And we can probably see a lot better on this time frame here. Yeah, this one was a really big one that made me a lot of money because I counted it properly, right? It's ended up making a diagonal up there where this was the fifth point pretty much, and it was extended. So we see these kind of patterns all the time in every single chart. But these fifth waves, they're basically extensions where it's not quite exhausted itself yet, and we'll find it in a very bullish market, right? So this is a really bullish market. So basically within that wave, we also count 5 waves. 1, 2, this is a small one here, 3, 4, and then when we get up there, that's our 5th one right there. So there's 5 waves within that last wave right there in an ending diagonal, and it's kind of like a flat pattern as well, okay? So that's how I knew, guys, that we are now in the 5th wave, right? There's 1, 2, 3, 4, 5 there. There's basically an A, B, C, D, and E correction here, where this could have been a 9-wave flat. This could have been a 9-wave. Let's see. 1, 2, 3, 4, 5, 6, 7. No, I'm definitely counting it wrong. We'll just say sort of, it's an ABC correction either way, you know? Either way, it's some sort of ABC correction that could fit into a 9-wave, or it could fit into an ABCDE correction. Either way, right? So here, if you guys can see, absolutely, right? 5 waves. Let me clear all this out so we can, actually, no, I won't. I'll delete all this. I'll delete all this here. And we're just gonna make sure that you guys are all on the same page with me here. So here's your 5 waves, right? 1, okay, 2, 3, right? 4, and then the 5th one is all the way up there. It's really hard to disagree with that, right? And it's really hard to say that there could be more of an uptrend when we've clearly counted 5 waves right here already. And it's just the way the market works, right? It works in these zigzag patterns, and they don't always work like this, guys, right? I mean, there's always the debate of, hey, if everybody knows that there's 5 waves all the time, why don't bigger players, you know, investors with millions or billions of dollars just play against us? Well, they can, but there's a lot of liquidity involved as well, right? And it's just the natural flow of it based on Fibonacci numbers as well. So it retraces to a specific Fibonacci number, for example, like this one here, the 4, does not retrace back to the zone where wave 1 is. I had a guy on Reddit, he just honestly made me crack up. Like, he was on Reddit and he blasted me, guys. Like, I kind of just, I love that kind of stuff because it makes me realize how patient I am in general, I guess. Because, I mean, what kind of person goes on the internet and searches for posts where he can blast people, right? And I was looking at his posts on Reddit, and I kid you not, every single one of his posts was like going to someone else and just being a smart-ass know-it-all. It's like, what kind of people do that in life where they just go online and try to make other people say, yep, you're right? It's like he was just putting down Elliot wave theory so hard. It's like, okay, if you don't like Elliot wave, that's fine. You know, you stick to your own technical analysis. I'll 100% respect it, no problem at all. If you don't like my analysis, no problem. Just stick to your own or don't watch my video. And the guy said to me, he said to me, wow, I watched the 1-hour video and all that you did was talk about nothing. And I just replied to him, I hope you have a nice day. And I told him my monetized ads, it really appreciated the hour of your time. Which is really true. Thank you for watching 1 hour of it. I got paid 5 cents because you watched it, you know, from YouTube. So what I'm getting to is you guys don't have to like every single strategy that I'm using, and you don't have to respect it for that matter, right? But just take it with a grain of salt and understand that there's many different ways to trade, right? And we try to evaluate things from all perspectives so we can formulate an opinion, right? Like I always say, if you're reading a newspaper, read it from various publications because you need to know news from various places to have an opinion rather than a very biased one particular source. And I'm actually going to recommend someone at the end of this video. His name is Haijin Lee. He's like some Korean guy. He's so awesome. He's an analyst on YouTube. I'll put his name at the end of this video if I remember it. If not, I'll tweet it for sure because I love that guy. And he watches my videos and I watch his videos. And he's the only other Elliott wave analyst that I've met on YouTube who does it pretty well, right? I'm not saying I do well, but I haven't seen a lot of other people do analysis like me. So that's it for I ramble a lot too, guys. I'm so sorry. I get it from my dad. My dad always rambles, but he, you know, he's like full of wisdom, and it's like I think I got it from him or something like that. Where I just want to make sure that you guys are are not losing money, right? I just want to make sure you guys are doing it right. I want to make sure that you guys are open-minded and not narrow-minded, and that we take information in with a grain of salt, and then we evaluate every single thing, guys. Okay, so now it's so clear that we're in a downtrend, guys. Like, it's so clear that we're in a downtrend. So the next play, guys, is, you know, the next play after, sometimes my analysis is not always to predict, right? It's also to give you guys an idea of what you could have done, because if you look into the past, you can have an idea of what to do in the future, right? So this is where my short range was. My stop loss is going to be really tight. I don't think I could really lose this trade, right? I'm probably going to take a 5% profit right on the 15-minute EMA bounce. But the best thing to do to take target wise would be to open up your Fibonacci retracement tool, you know, just drag and drop it there, and just target somewhere around 382. 382 is a very respectable retracement number. And then do you guys remember what happens after we have 5 waves? We have an ABC correction, right? We have an A, we have a B, and then we have a C. Now the C has many, many different factors, which I will pull up to show you guys. So this is a normal market cycle correction, right? This is a normal correction right here. Let's take it A, B, C right here, okay? A, B, C, where C comes down a lot. But you can also have ones like this one, where the C is just slightly lower than it, okay, slightly lower than it. Or you can have ones where the C is slightly higher than it as well, where it's truncated, okay. You can have ones that are even. So the C position is always questionable. So the B, we don't know how much it's going to retrace, right? We have no idea how much it's going to retrace. We take Fibonacci. Normally you take Fibonacci from, say, wave 1 to see how far this retraced, and then wave 3 to see how far 4 retraced. But when you do a big correction, right, this can be counted as one wave right here, okay? That right there is counted as one wave, whether it's a primary or you know, a grand cycle. There's always going to be a massive, massive correction when it hits the 5 waves. Massive in terms of proportional to the wave. So now we take Fibonacci from the bottom to the top there of that wave, and you know, my first target is always 382. Now second target could be something like that, right? Third one could be here, fourth one can be here. What I do personally is this one, I don't really know the kind of magnitude or direction it's going to go, but what I do is I always short it from wave 5, and then my target is always where 382 is, for no matter what, guys. It's my general rule that I always follow. I short from the top, and whatever my risk to reward is, I close my position at 382. Now it may go down to 0.5, that's fine. If it goes down to 0.5, I'm cool with that. And it might bounce up to there. And then my other rule that I follow is no matter what, when B is done, okay, so these are just some of my rules. I will short it, I will target right there. Whether it goes to here or to here, it doesn't matter. If it goes to here, for example, it'll bounce back up to somewhere where B is. We don't know where, but because it's still in a downtrend, you know, it could be up here for all we know, and we can get a double top, right? It can retrace all the way to the top. It could be here. So it's a really big range, and the way we gauge it is just based on all indicators and everything else that we know as well, right? But regardless, I close my position at 382, and you know, B could be up there, wherever I find the top. Okay, guys, wherever I find the top. This one usually makes a 5 waves down, like that, okay? 5 waves down. And then this one will always make an ABC. And this is why I like to use Elliot wave, because it gives us an idea of impulse waves and corrective waves, right? As soon as I see this ABC pattern form right here, I will short it no matter what. I will short it, because I know it needs to finish this ABC correction, and then it needs to make its way down to C no matter what. In every single, it's just the way Elliot waves works, right? And it's just the way impulse and corrective waves work. I can't explain it well. I don't know how to explain the theory well. I just understand how to apply it extremely well. So I apologize. And then this wave down here, I will short it, and wherever I think the bottom is, just based on everything going on, that is exactly where I will close my position from the short. So this range could be massive, okay? The B position, I'll just use it there as an average. I expected to get a slight bounce right here at the 43-cent range for the people just tuning in. I expect to get a short position, big box somewhere up there. And then my C position is always a big box too. It could always be somewhere between 382 and say 618, right? Because as long as we break some highs and we do pretty well, it's definitely going to land somewhere in here, along with it's still fairly bullish. And then once we finish that, we can get somewhere to here. So I want to give you guys some targets, okay? Some targets is around the 382 where we could bounce right now. That's around 43 cents. And then it could bounce from a B range anywhere from 46 cents all the way to say 49 cents or 48 cents, we'll say, okay? And then after that, it'll make its way down anywhere from 39 cents all the way to 43 cents, okay? So make sure you guys watch that video again if you don't know. These are the targets based on Fibonacci numbers. Right now, in this particular video, it is just not possible for us to make another impulse wave up before we go through one of these corrective patterns that I'm mentioning. Now, it doesn't have to be C right here, then it goes up, right? Because we could always get a W, X, Y, Z. W, right? And then we get an X somewhere, say, up here, and then we have another Y down there, okay? If we get something like that, do you guys know what this makes? Makes another huge wedge pattern, just like this, okay? Makes another huge wedge pattern, just like that, right? And then we have to play it out until it all finishes, right? Until it all finishes. If that doesn't finish out, then what we're gonna end up getting instead, just for the long road, is a W, X, Y, Z, like we've been seeing a lot. W, right? And then we get an X right here. And then we can get a Y here. We get another X up here. And then we get a Z, which is basically a 1, 2, 3, 4, 5, and then a breakout. If you guys look on the daily chart, I mean, it's kind of funny that we can also call it this too here, right? W, X, Y, X, Z, okay? Look at this. W, X, Y, X, and Z, which same thing pretty much as an A, B, C, D, E, right? It's just a different way of counting them, and we're looking at fractals and subwaves within waves. So that is where we currently stand, guys. We stand right here in these target boxes that I'm mentioning. We have a great short opportunity soon, right? What people could do if they'd like is they could go into, for example, I keep deleting my Fibonacci, I don't want to delete that, right? They can go into a bounce, for example. If they do believe that it's going to bounce and all the indicators show, then we can go into a bounce position and play it to B. And then after we hit B, we can basically short it, okay? So first target is around 43 cents, and then it can go up to anywhere. It can go lower. Don't get me wrong, guys. It can get lower. We don't know exactly how low this one can get right now until we know. So I'm just using basically target areas. It can go anywhere from here. It can go from 40 cents all the way to say 382, right? 382, and then from this area, it bounces up to anywhere, you know, even up to a double top, say from 45.60 to 48, and then it'll come down to anywhere between 43 cents and all the way 39 cents. Now, what I want to do is keep you guys prepared, okay? If I give you guys an exact target and you're disappointed, it's not a good thing for either of us, for you or for me. So what we do as a trader is we try to react to market conditions based on all indicators and data that comes in, right? And data comes in often, right? Every time there's a candle that ticks, we're looking and waiting for that candle to see what kind of formations we get. So as much as I would love to give you guys exact numbers, as a good trader would do, they'll play with target boxes instead, and they'll use indicators as a guide to when we can reach these type of targets, okay? So that is where we stand today. Hopefully there's more information that comes in tomorrow. Hopefully for the November 9 update, we'll have hit this particular area already, okay? So have yourselves a great day. And if you guys enjoyed this video, make sure you subscribe. Make sure you have a like button. I keep a little tip address at the bottom there. It actually goes to my dog Luna, which you guys have heard her howl in many videos. She's got her own little Bitfinex not a trading account, but a piggy account there as well, or a piggy bank. And I hope to see you guys in the future. Always stay positive no matter what, and keep the haters out of your life. They're just jealous of you guys who are successful traders, okay? So keep your chins up and keep everything very small lessons. Don't make them expensive lessons, because expensive lessons are horrible. Lessons can be learned at a very small cost, okay guys? Have yourselves a great day and take care. Bye.